Hey guys, what is up? Today we'll be talking about this company in the microfinance industry. It's called Satin Creditcare Network. I think it has great potential. It's pretty small cap and it's trading at a very reasonable PE. If you look at even the price to book value is pretty reasonable as compared to so many other companies that are trading at this time. It has a good ROCE and ROE for this industry, and even the return on assets is not, I mean, above 5% is usually what's considered to be good, but this is also good for a micro cap, I mean, for a microfinance company. It has great price to sales as well. And if you look at the growth, it has been growing pretty well. If you look at every, it's going really well, in fact, I'd say. And if you look at the chart over here, the median PE is staying at around median PE, but you must take into consideration that it's actually giving great returns in terms of profit, in terms of profits. So if you look at this here, it's been growing. And if you look at this, the reason for this is COVID. So what this company usually does is, I mean, what they do is they finance smaller purchases. If you look at this, um, this is their website. And if you look at the kind of the kind of services they provide is mainly financing, mobile phones, cycles, solar installations for the people in rural areas. And I think they're also going to get into housing. They've applied for that, but I don't know what the status on that is. If you look at their balance sheet, their own money is growing, the reserves are growing. That's a good thing. The only negative thing I see in this is the shareholding pattern. You see, it is not that high, the promoter shareholder, the shareholding, and the public shareholding has been increasing, but that's okay since most of the guys who have been buying it are the big hands. Look at this. And if we study the technical part of it, if you go to the technical part and go to the charts, you'll see that what has happened here is this was to be like a cup with handle pattern, or it is forming a cup with handle pattern. Actually, if you look at it, there's a small cup with handle pattern over here. Oh, this exactly this. Okay, so there. Look at it over here. And over here, there's a very small handle. It did break out and it did go up, and it also came back to retest it. It fell down because that fall in the small caps during this time in March, and it went up again, started its journey, and again it fell down during the election time, and again it started its journey up. So all in all, I think it is a company that will give you great returns, and the minimum I look at right now is somewhere around this. 1 minute, let me just turn it off for you. This is mainly due to the financials. So the fundamentals support this. So this is what we're looking at in the medium term, I'd say maybe 12 to 18 months. The second thing I want to talk to you guys was about the paint industry. I think this industry has been beaten down right now. If you look at Asian Paints, the largest player here, and I think the reason why it's going down is also because of some kind of, you know, clarity not being there with respect to Grasum entering this entire space. But if you look at it, just because someone is entering doesn't mean a big company like Asian Paints is going to go bust. See the amount of returns it gives. I mean, great return on capital employed, great return on equity, great sales growth for such a big company, and great even profit growth. The last year hasn't been that good for them in terms of revenue generation. It has been pretty much stagnant, very similar to the previous year, but the margins have increased. You can see that over here. So that is one great plus point. And if you look at the PE that is trading at, it's way lower than the median PE. So that's another positive point. And if you look at the peers, I think all of them are great contenders. If you see Berger, Nerolac, AkzoNobel, which makes Dulux paints, and I wouldn't go in. I mean, Indigo Paints is also good, but let's just stick to these four companies right now. If you compare them, you'll see that Nerolac is trading at a very low PE. But the reason for this is that if you dig in a little deeper and open the profit and loss account, you'll see that the other income, exceptional items, is contributed to a huge portion. So if you remove the 700 from this, it is maybe around 800 crores. So 800 crores is a good growth, but not as good as we would expect. So the P would be much lower than what it's actually showing over here. It's showing this simply because of that. And in terms of return on ROCE and ROE, it is much lower than Asian Paints. Asian Paints is around 35 and 31. And in terms of growth, it's not that great. I mean, it's all right. Nothing, I mean, it's actually not that great at all. So, I mean, Nerolac is beaten down. It's a good stock to look at in terms of technicals, but I would still prefer Asian Paints. And between these, I'd still actually prefer Berger the most, because no, again, the numbers are not as good as Asian Paints. There's a reason why Asian Paints is the leader. But I think this has been beaten down much more and it has more potential as well because they've also added some fixed assets. So this has been added here, which will start giving us the results very soon. You'll see this, this probably increasing in the next year, in the next couple of quarters as well. So everything looks good. So I think this is another industry to look into. Between these four companies, I would actually rule out Nerolac. Even though it is a great company, I would prefer investing in Berger and Asian at the same. Let's look at the chart and let me just explain to you. Asian Paints, it trades in kind of in the past, if you look at it, the past maybe 1, 2, 3 years, it's been trading in range. This is the range that it has made. It's been trading in. Look at that. So it was at the bottom of this range recently, so it looks like it's going to probably go up here. Maybe it can even go down and then go up. I can't say, but I think it looks like it's going to go up from here because the fundamentals support that. And so this is at least a short term, maybe a 6 to 10 months, 6 to 12 months kind of a thing. This is the kind of thing you can look at in the near term. If not that, somewhere here as well, maybe 20%. Again, I'm not a SEBI registered advisor. I'm not advising you. This is just for educational purposes, but this looks like something that is doable in the short to middle term, 6 to 12 months. Um, so this is what I thought I'd share with you guys today. Do your own studies and study the fundamentals deeper and good luck with the investing.